Hello, it's Wednesday the 28th of August and we're going to take a look at Bitcoin and crypto after we had a little bit of a rout and a shakeout yesterday. It's really not clear to me what triggered the rout or what triggered the selling or unwinding of positions. I think that we have seen a little bit of pull, but obviously we've had a really nice bounce since last week when the Fed gave their clearest indication yet that they're going to cut rates in September. And perhaps that got a little bit overdone. But really, for me, when I look at where we are, we're still in the middle of this correction zone, dead in the middle of this horrible choppy zone, and not really yet making any kind of ground or clear indicator that we are going to the upside. I think the technicals aren't too bad. And it was quite interesting to me that stock indexes, it was quite a broad sell-off in crypto, but it wasn't a broad sell-off in other assets. Stock indexes have held up really well. Now, there is a bit of a seasonal pattern that towards the month-end window dressing that stocks tend to do all right until right to the end of the month. And we could see that this week. There's really very little data this week to move the market until we get to Friday when we have PCE inflation data for the US. People ask me why I'm quite so US focused with Bitcoin and crypto. And I think particularly for Bitcoin and ETH now there's an ETF, because there is so much volume in not just the CME futures, the volume in the CME futures are as big as Binance. And with these ETFs now and them being such big players, what happens in the US does move the market in crypto. And if you think that, 90% of the holders of Bitcoin are hodlers, they just don't trade, and only 10% of the trading is, the trading is only done by 10% of the Bitcoin holders, then these ETFs and futures and, the options market, that's a whole other thing. They do become more important and they do drive the market. So we need to take a look, I think, most importantly about seasonal patterns, because we are heading into a pretty nasty period for stock indexes. I think one of the clearest indicators for me is going to be what happens with Nvidia. Today we're in the pre-Nvidia lull. After the US close today, we will get Nvidia earnings. And they're going to be really interesting because Nvidia almost always beats. And analysts on average are predicting that the chip maker is going to project revenue growth of more than 70% just for this quarter. Some people are expecting an even bigger surge. So let's put it this way, everybody's expecting Nvidia to beat, and it's going to be about how much. And I have a pretty strong theory about what happens when markets stop going up on good news. I think I looked the other day at AI related coins. I think some of them are set up quite nicely, and what happens in Nvidia will drive the market. But for now, I think we need to watch. Stock indexes look really strong still. So does Nvidia. Let's see how much they beat by and whether the market keeps going up, because seasonally we're not heading into a good period. We're not heading into a good period for gold. This is the months of the year for gold. And gold, the dollar, Bitcoin, they're all quite correlated. And if we look January to December along the top here, for the last 7 years, 7-year average, September has been a pretty nasty month. August hasn't been the best. It's kind of 50-50. But definitely September is the worst month of the year. If we take a look at all asset classes, this is the S&P, the NASDAQ, the Russell, Canada, UK, Japan, emerging markets, US treasuries, pretty much every market is not happy in September and sees a little bit of a pullback. So some a lot more than others, some a little bit more shallow than others, but we are heading into a pretty ugly time of year for risk assets. If we take a look at just the S&P in terms of stocks, we can see last 10 days of August are kind of 50-50, but the first 20 days of September, pretty much across the board, and this goes all the way back to 1928, are negative. And so is that going to weigh on other risk assets and Bitcoin and crypto and liquidity? Possibly. I think we need to buckle up for a little bit of a bumpy ride, possibly. At the moment, of course, everything is still pointing north in stocks and stock indexes and the S&P, and we haven't got to worry, but September can be choppy. Let's just be clear about that. What difference is the election year going to make? If we take a look at this chart here, this black line in the middle is the average of all of the S&P in all election years. And in all election years, you can see that September into October, on average, is pretty negative, down a couple of percent. If I take a look at this top line here, which is when we have a sitting president running, which we did until Biden resigned, that's not the case now. We can see that September, October is a little bit choppy and sideways, but it's not a really negative month. But if we take a look at this lower hash line, this is what happens when it's an open field. And pretty much it's an open field now. I think it's pretty much 50-50 with Trump and Harris. And so we can see September down to the election in October, November is seasonally, and remember this goes all the way back to this one goes back to 1952. This is the closest chart I could find. Pretty negative, and mostly negative when it's an open field, which is what we have got at the moment with the current election in the United States. And yeah, what happens in the United States does at the moment have an outsized effect on Bitcoin because of the volumes that are traded there. So let's talk about where we are. This is a weekly chart of Bitcoin. As you can see, we've been in this really nasty choppy correction since March. I pointed out yesterday, each one of these corrective bounces are quite interesting because they have been equal. This swing is equal, this swing is equal, and this swing from this low is equal. And I kind of look at these patterns because as long as we keep repeating these patterns, potentially, you know, we stay in this same choppy, nasty correction. One thing I also look at, as everybody knows, is fib retrace levels. So I was expecting a little bit of a pullback here, but I was expecting only a shallow one to this 50% level through the middle, which comes in around 61,400, 61,500. We have closed underneath it. Are we going to bounce back this week and save it? Is this just a little tail where we're going to have a sneaky peek look underneath like we did here, and we're going to continue higher or not? As you know, I look at fib retrace levels. So if we go from this high to low, we reversed at a 61.8 fib level. That's if you get underneath or you trade between the 61.8 and the 38.2, it's called the golden ratio zone, and it's very often choppy where bulls and bears fight it out, and you can quite often go sideways in this range with this 50% level through the middle as a little bit of a pivot level, and that's at 61,500. Whenever you've got your moving averages flat like this, then we're in that kind of chop zone. We're not actually going up yet. So we can say that this 61,500 level that we failed to hold as support yesterday, blasted underneath, is still kind of our pivot level through the middle here of this nasty consolidation that we've been in. So if you buy the pullback here, that's got to be your first target. If you're short-term trading this, that's a bounce here. That level has got to be your first target. For me, I think we're going to chop around in here, and for me, because this now looks like a very nasty three-wave correction, I actually think that we could find resistance here and still see another leg lower. And for me, when you're doing when you've got a three-wave correction like this, the most common, I'm not saying this is where we're going to go, but the most common retrace is a 786, which does point to a pretty deep retrace of this of consolidation and sideways range that we're in. I'm going to say I'm wrong about that. We're not going to come down here if we can get back above this pivot level in the middle. But for now, I have to say it's just chop. And because of what I think is coming in September, potentially a little bit of a shakeout, at least the first couple of weeks, I think it's quite a good time to trade lightly only good setups, and you know, yeah, just wait and let this play out, because if we do get this bigger pullback into September, into October, it will be really nice buying opportunity, because pretty much across the board in most assets, November is a really good month, and so we don't want to be wiped out before the really good stuff happens. So that's how I'm seeing Bitcoin. Now, as you know, in this chop, no guarantee that we are going to go higher. 61,500 on a 4-hour or daily close for me is going to be the key. It's pretty nice on the 4-hour. That's right in the middle here. We can see it really clearly, and the 200 moving average. So yes, I do think we'll bounce. I'm only going to get excited about it if we get back above 61,500, and we need to watch out that we don't continue lower from there. And for me, the best indicator of what we're going to be doing going forward, I think, is going to be Nvidia and what happens to Nvidia tonight. I think we're going to see some pretty big swings, and I'm always nervous when markets stop going up on good news. So what about ETH and some of the, as you know, ETH was down, I think, 10% at some one point yesterday. This is a weekly chart of ETH. If we go all the way out to all-time lows in ETH, which is 0.15, I think, to the highs that we made in November 2021, we've done a pretty interesting fib pattern. But what's clear from all of this is the 50% level from all-time lows to all-time highs, which is a bit of a pivot level for ETH. We can see here from 2022 and these swing highs in January is 2,400, and whichever we play this and whichever way we look at it in terms of fib retrace levels, if we go from this low to the high, we can see that from this swing, from this low to this high, this is also 2,485, this 50% pivot level. So a little bit like Bitcoin, we've kind of got a bit of a decision level here, a kind of choppy zone. I would really like to see ETH hold above this and keep going higher. Are we likely to do that? I would never say never, but if we look at where we actually made a low here on this spike low on the 5th of August, where everything else bottomed, it was actually tagged down to this 61.8. So we're actually doing that 61.8, 38.2 zone thing here. Let me put the numbers on the right so we can see them in ETH. Now that's pretty interesting, because we didn't quite get up to this 38.2 level. We didn't quite get up also to pretty interesting support and resistance. I would not be surprised if we saw another swing higher to test 2.86. Above 2.86, I would be more inclined to say ETH has potentially got a bigger bottom, and we are likely to head back to the top of this channel, 3,000, 3,300 and the daily 200 moving average. So we are potentially at a pretty interesting level to bounce from. And if we can in ETH, I would not be surprised if we see 2,864. We are finally seeing inflows into the ETFs improving, and not just in ETH, but in Bitcoin. I think, though, we need to watch out what happens in the broader market. Sorry about my dog. Okay, if there is anything you'd like me to take a look at or any interesting charts, let me know.